Nibiru chain, are you allowed to dox yourself and share your name so that I don't have to call you Nibiru chain?
Oh, this is unique. Yeah.
Oh, beautiful. Okay. Awesome. Hello, Unique.
Hello.
Anybody else on your end coming?
We have Jonathan here, it looks like. I don't know if he wants to speak.
We can give him, Krill, you want to give him the option?
Hey guys, thanks for having me.
All right, we're gonna get a minute to get started. Joe, while we're kind of going through that, do you want to do a little background on alpha growth, and then I'll jump in after the alpha growth talk, and then talk about Unique and a little bit of Nibiru, and then we'll kind of jump into it. How's that sound?
Sounds great. Yeah.
Coolio.
So we're the Alpha Growth team. We are helping the next 1,000 teams get grants in crypto and find the right ecosystems to launch with and go multi-chain, all that good stuff. And we help different ecosystems with anything from infrastructure to tokenomics and sourcing cool developers and the next top narratives and a lot of alpha. And yeah, I think that's pretty much on our end. If you guys want to chat a little bit Unique about who you guys are.
Sure. Nibiru's team is comprised of backgrounds in a mixture of Web 2, Extenderment, and other projects in Cosmos or Ethereum. In my case, worked on Sommelier before this. And personally, my background is more in ML, but obviously as of late, it's been a ton of blockchain for the past 2 years.
Jonathan, you want to give a little background on yourself, sir?
Yeah, happy to. I joined the team recently, and I previously worked in New York in equity research for Credit Suisse, and then I worked in TMT investment banking at JP Morgan. Then I moved over to San Francisco and worked with GIC, the Singapore Sovereign Wealth Fund. So I did a mix of venture and growth equity investing where I covered crypto and fintech. I actually met Unique at ETH Denver, I think 2 years back. Sat on a couch and just happened to get along with him. And we did a hackathon together. So it's been an exciting journey since.
So you're the guy that messed up all of Credit Suisse, and it's all your fault, right?
That's exactly me, but don't put me on record saying that.
Yeah, my background working with Unique was rad at Somme. That's where we met, and then we have the infamous desert walk and I gotta say, dude, you have a co-founder there and a partner there that dude, I would launch a company with, man. He was, dude. There was a couple people you can understand how much they're worth, their worth and their persistence and their and Unique was one of those people that I would take on any adventure, and I just want to throw that out there that it was a rad experience. Cool, but let's get into your project. Generally it's really good to say okay, who needs another blockchain, all this other type of stuff people ask. I was why did you choose? I'm super curious why you chose chain versus dApp. And then kind of what problem that you're solving that you guys got excited about that you wanted to tackle.
Sure. So as for chain versus dApp, one aspect of it is, I think kind of some of this goes into why do you build an SDK module versus just launching, say, an Ethereum or Cosmos smart contract? And that really just goes to low-level control of very specific parameters that are you can't edit on Ethereum. You don't get the begin and end block hooks. And so essentially there are advantages we get on more specifically for the perps exchange and Oracle module that would be kind of impossible to build on Ethereum. So it's we needed that level of control of the stack. Then as for the problems we're solving, so it's a few things. One would be the removal of complexity from having too many tokens. So for example, we're developing custom duration bonded liquidity gauges for the spot AMM, where users can essentially just lock longer to increase their external token rewards on top of an LP position. So since Nibi's already the governance and staking token, it already acts as a sort of V or voter escrow token. In effect, this means you don't need to use Convex, vCurve, and ETH. You crunch them down into one thing as Nibi. A second point would be
Well, can
aligning.
we? Well,
Oh yeah,
that's a lot, dude. There's like two things that are giant mouthfuls. All right, so let me try to speak it back. You couldn't with the current stack and the current tech available within ETH or within the SK, there wasn't enough fine tuning parameterization to get the juice out of the chain that you needed to build the DApp you wanted to build.
exactly. Yeah,
Okay. All right. And now you just combine four different concepts in this token. Well, it's a gas token. It's a governance token. It acts like a VE escrow. Um, can we break that down more, because there's a lot embedded in there.
yeah. So if you kind of just think of it this way, when you lock, so you LP on Curve, and then you can lock the LP position to gain additional CRV, and you do so by using your voter escrow curve. On Osmosis, the analogous thing is you lock into the gauges, and there's 3 different fixed durations you can choose. So it's essentially like if you found a middle ground between those two things, where you can continuous lock up to some max duration, except so you can scale your rewards like you do by locking longer on Curve, except it's just a normal reward of Nibi like it is on Osmosis. So there's it's a little bit more choice there. So why I bring up the voter escrow aspect is just you get that for free with Cosmos. So if you're using your staking token as the reward emission, then you already can use it to vote. That's kind of what I was getting at.
Are you voting on a particular gauge? Or are you voting on a perp position? I know you're voting on governance. Are you doing the gauge and the emissions all through governance?
Oh, that was just I mean, that's kind of generic. I don't know if we would have gauges like Curve. It's just that you do get more of a voting token for locking longer. That's kind of the point I was getting at. Yeah.
All right, so like normal staking has like a certain bond rate, and are you guys doing like multiple bond rates?
There's nothing like that in the roadmap right now.
Okay. All right, so more fine-tuned control on the perpetuals. And when we talked in ETH Denver this past year, what you were describing is a new type of DeFi primitive that you're launching with your chain, the perpetual. And you tried to explain it. It was loud. There was lots of music, and I'm like, dude, I've never heard anything like this. So I want to dive into your perps positioning and what you're working on, because it has massive potential. But I want to hear it again without some crappy techno music behind us.
Sure. So I guess the crunch down simple version of it the perpetual of Nibi perps is it's a perpetuals exchange with AMM based price discovery, which would be similar to like perpetual or perpetual protocol or drift, right? But you can support any Cosmos native pairs in addition to external ones like ETH, Bitcoin, or even Doge or something. And eventually, all of it would have these improvements of like automatic market operations for repegging, swelling the liquidity, and even for performing liquidations that are like fully automatic, right? So there's actually a lot to unpack there, right? So I guess I'll kind of focus on, say, the liquidation aspect, right? This is an example of one of the ways you can like improve the economic efficiency and safety. So the idea with that feature rollout is that you basically make the liquidation fidelity perfect, because you remove the external agents that normally call liquidations. So we'll have a white paper coming out on that, but because it's kind of its own little, well, not little, but it's its own product suite on top of the perps that essentially the chain itself tracks and executes the liquidations. So to my knowledge, it doesn't exist anywhere in the DeFi derivative space, and it offers several advantages. Like it's the protocol's more stable in volatile price regimes because it's less stress and risk on the insurance fund. Because if there's not a human agent involved, it's not going to miss a position, so it's less likely to create bad debt in the first place. But also, it's a little bit easier on the users because if your partial liquidations deleverage you faster, it's harder to get fully liquidated, so you'll lose less money.
So, but how, like, normally in these kind of liquidation kind of cascading mechanisms, you kind of want a person in the loop that will be there, so you don't kind of like pull the ripcord and you have this like falling knife, falling crater event
Mhm.
where the liquidations start to put sell pressure onto. Now, how do you guys prevent that if it's all automated?
I think in some way that happens from like you have cascading liquidations if you catch some of them late, because a lot of times what you're kind of describing, I think, is when there's one large juicy position that people are watching for that they think will get liquidated soon, but then because you need to pay a lot of attention to that like whale position, uh, there's not as robust tracking on all the other ones. So like a good way to put this is like how one of our other engineers, Kevin, describes it is like it's as if you had it's a morbid example, but it's as if you had a room of people and the price at which they would get liquidated is like their height. And if you just track the water level, you know when somebody would drown without paying specific attention to anybody, as long as you store them in order of height in the key value store.
Okay, so what you're saying is that because you're liquidating less more often based upon the perpetuals and the way that you guys, because it's not just kind of like one giant liquidation, you can kind of it's not like a water dam breaking that creates a cascading effect. You're letting off the pressure of the dam based upon, in your example, height. The people that are lower height would obviously drown first, and so they're getting liquidated first, and it's not adding this cascading effect. But
Yeah,
no, some of
I
these
should have said it like that. Yeah.
instead of, and so part of the problem that we see in stuff like Terra and Kujera and these types of things is that and kind of tracking what they had is, if the liquidity, externalized liquidity where they're liquidating is thin, then it can create that cascading effect too. Like, how are you guys managing that? I think you said before that there aren't kind of like external parties on this. So how is that managed, or external pools to liquidate into?
It's basically part of, if you think about that, is normally why you don't do this is, let's say there's 10,000 or 100,000 or however many positions on your exchange, and if you need to know when they would get liquidated, you have to look at their maintenance, or well, their margin ratio, like how much debt do they owe relative to the amount of margin they put into the position. And so every time someone trades, and basically every block, and also funding payments factor into this, everybody's margin ratio changes. So if you can't just query all the positions every block, because it's too much network traffic. Like, it'd be ridiculous. So usually you store a ton of information, like the external liquidators store a ton of information in an off-chain DB, and then kind of have some like foresight of which positions are close to the border, and then pay more attention to those so that they're not missing, like, they have to come up with their own algorithms basically to do this. But you can just keep the positions in the store in order of who gets liquidated first, and actually use the price as the key. I know that this is kind of like a technical explanation of it, but if you do that, you can effectively grab all the people like with exact fidelity every time as like your begin or end block hook.
And then obviously you can like sort rank based on who's
Yeah.
next, and then do that comparison, so you don't have to scroll the whole entire index. You have it indexed and optimized
Yeah,
for who's next on the chopping block.
exactly.
Interesting. And so you're taking stuff that maybe Kajira or some of these other liquidators may have done off chain, and because you have enough access and availability to manage it on the chain at a lower level, you can kind of sort order and sort rank these things and then do it on your own chain.
Yeah, so that's like as transparent as it gets. Also,
Dude,
you can't.
that's
Also, you don't have to
amazing.
compete for your transaction. Like, if let's say the block only has a certain number of transactions that'll go through in some huge crisis scenario. Like, let's say it's the UST collapse or something. If your liquidators are competing against other people to put the transactions, I see that as an attack vector. But if the chain just does them as part of the binary, like they're not competing against other people to submit the liquidations. They just happen. Yeah.
Yeah. So you limit front run risk and MEV type of objections, right? Or attack vectors.
Yeah.
And this is uniquely done, I think, because we run our own layer 1 blockchain, whereas like other perps products aren't vertically integrated, so they can't do the same feature.
Right, which brings up MEV risk and front run risk on the liquidations aspect, right?
Yeah. So this was like a super long-winded answer to your why do it on Cosmos question. Yeah.
Because it doesn't work otherwise, right? Or it'd work less efficient. It would be less capital efficient.
Yeah. Or specifically, like I couldn't do this on Ethereum. There's just not the same flexibility.
Or you'd have to build your kind of like prioritization of your liquidations module in an off-chain manner. It would all this logic thing would need to be stored off-chain.
Exactly.
And then
which is the standard way of doing it, right?
And you could get front run and have MEV and then all these other potential issues. All right, that's rad. Cool. I get it, dude. This is super cool. You're building an on-chain primitive, and the reason why you built the chain is because the current chains wouldn't allow you to be more concentrated on the user and more fair, and people could kind of have consensus slippage. That's what I call MEV, is like consensus slippage in the way, so they could front run some of these things. And by doing it your own chain, you remove all of that risk, and so that people are going to have a better experience versus somebody playing inside baseball, moving blocks around.
Yep. I think another like key aspect of this is combining different primitives to feel like one application, even if they're separate. So in the case of large centralized exchanges like Binance and formerly FTX, there's often like a varied and robust product suite, like where you have access to an all-one UI, futures, spot, leverage, OTC, margin trading, lending, etc., and cross margin, right? Like all in one place. So obviously we can't launch with all of that at the same time, or even like that's a long-term vision, but we're aiming for something that feels like trading on a centralized exchange while remaining like super like truly decentralized and transparent. That's like the core idea, I think.
I have a question. I think Brian's gonna really appreciate this to hear your opinions on this, but I'm curious what you think about ICS and Neutron.
Sure. So just to like recap for people listening, so ICS, like interchain security, is the method for one blockchain to inherit economic security from another blockchain. So in the context of Cosmos, we kind of use security to refer to the stake and slash risk at the same time. So my take on this, I guess, so one thing ICS will likely do is help grant Atom, like the Atom token and the Atom staker, like Atom, more utility and scale the Cosmos hub. So it also helps the Cosmos stick to one of its core value propositions, which is horizontal scalability. So in one model, the same validator set can produce all of the blocks for two different chains. So it sounds like this is the approach that is happening with Neutron, which will support permissionless cosmosm like Juno and Nibiru, except secured by the hub directly. So I've wanted to see smart contracts on the hub for a while, and I think Neutron is an awesome approximate solution to accomplishing that. The bonus effect of this is additional value accrual to the Atom stakers, because the consumer chain is basically renting security from its provider. Usually the hub is what people talk about as a provider. So that would mean part of the transaction fees on Neutron, for example, would go to Atom stakers directly. Then, of course, there's one caveat that like you have increased slash risk if you have more blocks that you're like if you have more chains. But I think that the pros outweigh the cons pretty substantially. I particularly like that that ICS in general supports the infinite scalability narrative that was in the.
And we were talking a little bit about Cosmos on why the Cosmos is interesting, a little bit more about the horizontal scaling of the Cosmos ecosystem and IACS and shared security. And we were starting to talk about that. In particular, to focus back on Nibiru, I wanted to get a little bit more in detail and in depth around whether or not that, how you're leveraging IBC and how you're potentially going to be leveraging interchain security in the future, or is that something like not on the roadmap yet? And that's why we were asking that question, or that line of questioning. So let's dive into that a little bit more about ICS. Is it on the roadmap for Nibiru? How are you leveraging IBC within this, and then along those lines?
Gotcha. So I know we haven't really talked about using ICS. It's more of a thing that, like, I think from our perspective is helping scale once you already are going to have a lot of transactions, or if you need help bootstrapping a validator set. In our, like, in Nibiru's context, we haven't had a lot of trouble with those things. But I mean, I think it's cool tech, basically. But it's not in our roadmap. Like, I haven't talked to our engineers about using it at all. As for IBC, definitely it's kind of a must-have, because we need the inflow of Circle, and then in the future probably Tether, just so that because you quote into the Perps exchange using stablecoin, and then our stablecoin is like collateralized by other stables. It's not like a DAI type. It's more similar to Frax. So yeah. So the IBC, I guess, like, how we would use it is not just for influx of capital, but then also, I guess it would be, I mean, this one would be like later stage roadmap, but it would be kind of cool to get the other chains on board for, in the future, providing like an aggregator layer, similar to how you use, or like the Uniswap router or ThorSwap, except via IBC. So like, let's say a user wanted to swap Atom for Osmo or Circle or something, providing a simplified one button UI that routes you to either swap on, Osmosis or Juno, Nibiswap, Crescent, Injective, whatever. But find the user the best pricing and UX and give them that. Like, submit the trade wherever it would happen best for the person. So I think that would be a cool thing to build on top of IBC, but it takes like collaboration with the other chains to get something like that.
Yeah, that's what Neutron is kind of aiming to be, is this collaboration layer, tacking into IBC to build these types of either routing or structured products. Long journey ahead, but because like once you get the perpetuals up and running on your chain, it unlocks a lot of different delta neutral positions, or even like different types of positions in structured products and indices. Once there's like a really good embedded perp like you guys are building embedded in IBC.
Exactly. So you can, right, just like you touched on, you can do like yield farming strategies, but optimize for different like risk profiles, or for focusing on specific like sectors of DeFi you could think of. You could offer, like, you could let people use stablecoin LP positions and like take out a loan against them to trade more capital, that would kind of be like getting like when designated market makers on a SEX get a loan from the exchange, except you could just do that permissionlessly. And then you can even add things on top of, like, kind of a vault that leverages multiple applications. So like, you'd say, I'm going to go short one side in the perp and just do a classic basis trade and take the equivalent exposure long in spot and just make money off of funding payments. That's like a simple strategy you could run at scale with like multiple people participating in as one position, right? So yeah, I think it'll be really cool to do that sort of, like, those sort of cross-chain apps.
What would you say has been the biggest mistake or lesson that you guys have picked up on? Because obviously this industry is so new and dynamic. It's always really interesting to hear, where people tried something maybe big and did something experimental and learned a big lesson from it.
Yeah, I would say, so there's a couple that come to mind. So one would be aiming at too many moving targets. So there's this innate difficulty built into many of the core applications the founding team is developing, between smart contract apps on top, a perps exchange, spot, decentralized Oracle network. Like each of these components are entire protocols developed by a single team usually. So it's been challenging to identify where best to allocate resources to make sure we're not just executing the right things, but executing like the right ordering of things to like be most effective or have a like make sure that it's not shipping way too late, right? Another one I would say is not using CosmWasm more often sooner. So sometimes you need a native module, and sometimes you need a smart contract. So, like I said earlier, native modules are for when you want ultra granular, low level control, and smart contracts are a lot better for when you have like you want ease of deployments, flexibility, and like uh, essentially like they allow you to adapt quickly and like rapidly iterate on business logic. So with a more complex DeFi app like Nibiru or Say or DYDX, I actually think CosmWasm adds a ton of value there because you would spend a lot of time writing X modules for things. Like we found that we spend a lot of time writing X modules for things that we could have shipped faster at production quality if we just wrote them in CosmWasm like day one. And then probably also building things we could outsource. So like maintaining an Explorer, I know we were just talking about yesterday or today, I think, was kind of not worth it. I would have, looking back, it would have been better to just beg Cosmos Station or Mintscan or another or another validating team to just do it for us. Yeah.
That's super interesting. I'm glad to hear that outsourcing some stuff is on the roadmap for you guys, and a lot of people don't really see the value in that, and they want to keep everything internal. And then from the
we have an inside joke on that everybody in blockchain is a bunch of homesteaders, and they just want their entire chain to be like self-sufficient, embedded, and just build because builders want to build. But like you can move a lot faster with a little bit of payments and paying people for the expertise that they have. So like most chains don't have that wisdom. So well done.
Yeah.
And then in terms of you guys have the products, the perps, the swap. What do you think? What do you more? I don't want you to incriminate here, but what are you personally more long on between the two products?
Oh, that's an easy one. So at least initially the spot exchange is like I would say it's kind of meant to be there as like a public good or for convenience, right? Like it's if you're coming off of, let's say, like I know on Evmos there's like the seller bridge, there's native USDC, there's Axel, and you could be coming from like different base chains, and then probably we'll have support from other ecosystems besides just Ethereum a lot more in the future. If you don't have a like convenient place to swap on your chain, like this is a little bit counter to app chain thesis, but I kind of think if you have like five DeFi primitives and you need 5 blockchains to use them, that's kind of annoying depending on what they are. So the spot is like almost a servant to the perps, which has the main spotlight. Like, technically, I mean,
But wait,
it should be thought of as one app. Yeah. Oh, go ahead. Sorry.
Does the end user actually care if it's a different app chain running it? If the only difference is just you move to a different site?
I think it depends on like the speed. So if you're okay with waiting a couple blocks for the IBC both ways and then doing a swap and then doing the position versus if you want to just open it or come in and say, let's say I'm holding the collateral that's not the token, but I can just compute in the front end like, oh, if I sent one message where you swapped, minted a stable coin, and then used that stable coin to come into the perps, you can just enter feeling like one transaction. If I split it across chains, that it kind of like defeats the point. Like
I see what you're saying.
Yeah.
So this is just iterations in embedded DeFi essentially.
Yeah, you should get a smoother UX from like vertically integrating certain things. Yeah,
absolutely. And so then, what would you say? What would you say in 5 years you guys are going to be known for?
That's tricky. So I think like, okay. So one, obviously, like innovating in the decentralized derivative space and potentially creating a new foundational primitive, like in the same way that like Uniswap makes something that like you want to get forked a lot. It's like a sign of success. So if we make something that other people want to fork, I would feel very proud. Then probably providing major contributions to core Cosmos infra like the SDK, Cosmosm, and IBC. Like that's something we want to get our hands in more to kind of like benefit everybody. And then I guess risk taking in an attempt to bring about more widespread adoption for crypto as a whole. So a lot of the choices we make from a product perspective are all targeted at like making UX better.
Okay, that's big. And then this might be a little bit of a, this question might be, take it to a different place here, but just in your, from my opinion, and I'm not anywhere near as degen as Brian and probably you guys, but it seems to me like Cosmos is so much more culty and degen that, onboarding new users into Web3 is going to be difficult or more difficult in the Cosmos ecosystem. Do you agree with that?
I think I usually, if we're looking at data, I would say that's just like an objective reality, right? Like, let's see, if you look at, say, the BTC pair or ETH pair, using the Axelar assets on Osmosis, even when it gave like a lot higher yield than the equivalent thing on, say, the GLP pool on Arbitrum, you don't see people like flocking to it, even with like double the yield. So there's something about the Cosmos onboarding. That's just one example. But there's something about the Cosmos onboarding that is like off-putting to people. I don't know if it's just like ETH maximalism or if we need more ramps or more centralized exchange integrations. But
what is your gut telling you that if there was one silver bullet, what do you think it is that could either help that, or what is the diagnosis of why that might be?
So I think there's like two answers. This is just like personal opinion. So one is like providing comparable security to a separate L1 ecosystem. So it's like when I have an Avalanche maxi arguing that Avalanche is more secure, it's like there's not a lot of like super compelling arguments I can make that says like, oh, this specific app chain is more secure than like an Avalanche subnet, right? Like I think so. There's kind of addressing it from like the Tendermint security level, right? Then the other one is just like we don't have the same level, like, we don't have Gnosis faults and insurance protocols and on ramps from like every centralized exchange you can think of, and that sort of flow. I think it's just like those sort of like core. I mean, people forget this, but like most trading still occurs like predominantly on centralized exchanges. Kind of making it easier to move off of them. Having on ramps like Kato has been around a while, right? But things like that, where if I'm not a user of crypto, but I show up on your website, it doesn't take me like hours and hours to use the product, right? That would be, my take on what you have to do.
Yeah, that's a point I actually have not heard in a while, but it's kind of easy to forget that centralized exchanges are still where a lot of the magic is happening. So that definitely is a big problem that still needs to be solved, and I don't really know what that's going to look like. But yeah, thank you for those perspectives. That's pretty intriguing. So I guess in terms of partnerships, collaborations that you guys have on your roadmap and that you're looking for in the coming months and quarters here, what would you say is, well, what are you looking for in terms of partnerships and collab in general?
We touched on earlier stuff using the new tools in the interchain stack, like working with the other Cosmos chains via IBC in any way. That's definitely something we want to do. But I guess kind of off the top of my head, I would say cross-chain messaging protocols that enable like dApps to extend almost like in the same way that you use interchain accounts, but have it feel like that for something that's on like Ethereum or Solana or something. This is like some of the stuff I'm saying is like kind of far-reaching in the future. RPC providers, right? That would be helpful. Looks at Lava Network, right? Then anyone seeking a like grant or collaboration to build on top of our core product set. Yeah, those would be the like easy.
Hey,
easy ones
Yeah,
off the top
let's
of my
take
head.
this to
Yeah,
DMs. There's a couple like premium RPC providers that we work with that we've used in the past, and they've supported hundreds of thousands of users a day on different chains. So let's wrap on that offline.
sure.
And then also, Brian, do you think that they could benefit from what Paloma's doing?
Tarek and Unique are like we're all part of the at one point in time. I think we've all worked for Volume on the on this call. I don't know about Jonathan, but yes, there's probably a play in there too.
Okay, all right,
Yeah.
just making
Okay.
sure.
Yeah, and that's an interesting one because once you kind of get this messaging and indication, if there is a potentially a tighter integration with messaging, you could potentially like abstract some other type of structured product on the Ethereum side that floated down to Nibiru with Paloma. That there's some plays there.
Yeah, so you get it.
Yeah. So anybody in the audience that's looking to leverage the Nibiru perps and build some structured products and still get that ETH liquidity, there are some games and probably grants available. I would imagine, or I could help leverage from you guys in Paloma to build something like this.
Yeah, that sounds awesome.
And Unique, just wanted to touch very briefly on the grants program and just kind of how that's set up. If it's more of an RFP style, or if it's more of just open ended, and what that structure kind of looks like.
Yeah, but basically the short answer is we don't have one yet, but we want to do one. So, like, if someone came with an interesting proposal, I guess we would just figure it out direct. Like, none of us, or I guess in my case, is like, I've never been a founder before, so I would have to just like ask someone how do you structure a grants program. But
I don't know
yeah,
anybody that might know anything about that, except for maybe Brian and the Alpha Growth team. We might be able to have that conversation. I think that might make sense. What do you think, Brian?
Yeah, maybe. We only work with like high quality chains, and they haven't launched yet. So it depends on how many people. I'm just joking, man. Yeah, I would love, dude. What you're doing, it's pretty rad. It's a new DeFi primitive. There's so much opportunity here. It's like the wisdom of what to do next with this kind of thing is actually super experimental, right? So I think like there's like going to be a lot of different projects that will need to experiment building on top of what you built. There's going to be issues. There's going to be bugs. I mean, and kind of have to get builders to build on top of what you're doing to bring more liquidity and bring more attention to more users. It's kind of like experimental marketing. It's like, each new channel that you go after or each new project that you give a grant to could bring, 50,000 users, 10,000 users, no users, or just be a complete waste of time. And you have to go through that process to iterate, to figure out what, not just, what is the alpha is like, hey, here's this new perps. We're going directly to consumers. But then like, what the N+1 is like, okay, now that you have this new type of liquidity layer and this new DeFi primitive, what are the next things that you can kind of build on top of it and gets really experimental. And sometimes there's really good builders and you want to internalize that alpha for your chain and own it. But, effectively, I love your answer, and I'm totally going to steal that Unique about how like the quality of your project depends on how many people fork your project. That is such a good like KPI. So, I mean, lots of things that can be done. I'm kind of ranting now or rambling. I apologize, but yes, there's so many different opportunities that are available here with this new DeFi primitive. It'll take lots of iteration to figure out what exactly to do, but there's so many things that can be done now.
yeah, thank you.
Where's the best place to keep up with you guys and what you're doing?
Yeah, so we mostly stick to just Twitter and Discord. So this handle at Nibiru Chain. So we announce stuff in both places. But we are also
Beautiful.
pretty responsive with like, you can just ask questions in there, and like the founders or engineers will just hop in and answer them like on the fly. So.
I think what you guys are doing is really cool. And Loki, I know some people that are probably going to want to fork you.
Yeah, go get forked. And question on that, like timing wise, like you guys are in some flavor of testnet, mainnet? What's timing wise looking like?
So we're doing a phase-wise incentivized testnet. So if for people that did the Aptos one, it's kind of similar to that, but with different task set. So we're on the second phase now, which is like the same chain, but essentially we put up an announcement on our blog outlining some tasks, and like instead of just airdropping to random chains, you kind of provide easy ways for people to onboard. Like it doesn't take more than like a few minutes to do most of them, but it's kind of just a way to like make sure you're incentivizing people that are like actual early participants, rather than just like dropping it to the hub, which I see a lot. So as for timeline, we're looking to have an initial mainnet of some subset of the things in our roadmap for this summer. So like the most upcoming thing for I'm prioritizing is like we want to do an audit with Zelic and probably a Code for Arena, like public one. So shooting for this summer, basically.
That's awesome. I think there's a lot of people on this call, and dude, like let's follow up on that too. I think there's a couple places we can blast your incentivized testnet to get a lot of awareness and adoption. And also, there's some people on this call that run these different Twitter Spaces in the Cosmos ecosystem, and I'll introduce you to a couple of these, a couple of these Cosmos hardcore groups as well. And getting like the incentivized testnet, you can get a lot more, people Kepler wallet or Cosmos Station integrated wallets that already they don't have to download wallets and they're pretty Cosmos bullish already involved in your incentivized testnet. We'll follow up after that.
Yeah, that'd be awesome.
Is there any question that we're going to open up? There was one person that was here earlier. They looks like they left. Open up for any audience questions. If you want to come up and speak and ask a question, come on up. But I always like to end on this question. Is there anything that we missed or should have asked that you wanted to talk about, or any question we should have asked?
Whoops. We never talked about dynamic optimizations or Oracle solution, I think, but we just have a couple other feature sets that hard to cover all in one call, but I think we got the big picture.
So Jonathan, on that note, can you tell us about your dynamic optimization and Oracle set?
Here, I can jump in. So yeah, a lot of this comes from the concepts introduced in Curve v2, the crypto pools product. So for background, this was when it seems like we do a lot of stuff from Curve now that I think about it. But yeah, this was when Curve introduced AMM pools based on a smooth curve with similar benefits to concentrated liquidity bins. So like that, it's when they stopped doing just a stable swap and opened up like the tri pool and stuff. So a lot of people haven't read too much into this, but what the kind of core points from that white paper and how those pools work is you swell the liquidity at certain prices so that there's lower slippage, and you also adjust this internal peg. So peg is a bad name for it, but it's essentially just a number that lets the AMM shift its own price to a more healthy value based on like the size of the trade, and then also its relation to an exponential moving average on a reference Oracle price. So that's like getting into too much detail, but the point is you can get lower slippage trades without incurring large losses for the LPs. So kind of everybody wins. So Nibiru's concept at a high level is just add a lot of these same advantages, but make them for leverage. So you do an AMM based perp exchange, but then you add in the improvements of like, basically you want to facilitate higher leverage, like make it safer, allow it to scale with its liquidity. And it's kind of just a different approach rather than just using like a vanilla order book. Yeah.
That's complicated. Yeah. Very cool.
And then there's another, I guess we didn't get a touch on the Oracle solution, but I think with the general vision, we talked already about how there's a orders of magnitude improvement from UX just when there's like multiple tokens, multiple governance. But I think part of when you think of the development flywheel of a layer one, I think it's like you have the base layer itself, there are core apps on top of it, and then that attracts community because there's an actual use case in the apps, which then attract liquidity, which then accrues more layer back to the base layer. When you think about a layer one, the flywheel's got to start somewhere, right? So we'll touch a bit on this in the future. We're still formulating it, but we're building out with our approach the core apps, which we think will be the large attraction that'll bring people to our platform. So it's almost like having kinetic energy to kick off a flywheel. So I think that's what sort of differentiates us when it comes to some of the other layer ones, and we're building a lot of these different primitives ourselves. So it'll be more integrated, seamless, but it's also there's a clear reason why not everyone else is doing this because it's a lot of things to tackle all at once. So hopefully that point sort of makes sense.
Yeah, it's like you're kind of hitting at that piece of if you just make a chain and then you say there's 100 projects building on you, but then there's no liquidity, like that's not like I don't know that that's the best thing for adoption. I think it more goes the other way. Like if you have a core, like if we just look at like GMX, right? If you have a core product set that like attracts everybody to it, then you can extend it to like supporting spot and like adding more complex interactions and other like so you kind of need to figure out how to bootstrap liquidity first, and then people will build a ton of apps rather than just having a bunch of like ghost town apps. Right.
It's tough, man. Right now in the market, you have to buy liquidity with emissions and liquidity incentives. It is like we're working on a deal with another deal that we're going to basically to get $1 million liquidity in a particular DEX, they're going to be paying us $3 million of emissions. So I mean, it's pretty intense to right now in this particular market to attract liquidity. And then GMX, I mean, it was a little bit of inside baseball out of the gate. Their main investors provided a lot of the initial liquidity. It's like 4 major pools that have provided a lot of major liquidity. So that's probably the hardest thing for you guys. And other than getting builders on building structured products to provide the flywheel to get more liquidity, it's like, how do you get that initial liquidity from these different places? And I'll throw this out there as a suggestion / question. How do you guys approach with the fragmentation of kind of like liquid staking? Is that going to be on your roadmap and something you guys tackle, or is that like further down the road and you haven't been really thinking about it? Because a lot of places are kind of, hey, if we're going to be pooling, we might as well be pooling liquid staking and doing emissions on liquid staking versus, the core token. So I want to hear your thoughts on that.
Yeah, that's one feature. I know we don't have any plan right now to build ourselves, but it seems like it's kind of easy to integrate with like other chains that offer that service, or it's kind of one of those things like if the community is really interested in it, then we'll prioritize it over something else. Is kind of how I look at it. But the main like initial set is more like perp spot, the stablecoin, Oracle module, and then probably a natural like thing on top of that is like lending and vaults, right? But that's like getting far into the future a little bit.
Makes a ton of sense. It's yeah. Liquid staking comes later down the line. I don't have anything else, man. If there's any like final like goodbye little call out or sign off, like we didn't have anybody pop up for questions. We had a couple people earlier and then they left, but this has been rad. Like learned a lot. I get what you're doing, super powerful, and let's do like a little sign off here.
Yeah, I mean, I guess follow us and come check out the incentivized testnet for free money. So
you heard it here, free money. Come to the incentivized testnet, get free money, do the tasks. We'll be sourcing that. We'll probably follow up with an article and a thread about Nibiru's incentivized testnet, and they're looking for developers and builders to build on top of the testnet after the launch, and there'll be some different opportunities and different pools of liquidity to help build some cool apps off of. Unique, this has been rad, man. Jonathan, great meeting, and really appreciate your time.
Yeah, thanks for having us.
Thanks, guys.
It was amazing. Thank you.
Totally. This has been Brian from Alpha Growth. If you are a developer looking for a grant in the Cosmos Ethereum ecosystem, come on through, sign up a profile. We're launching an RFP module. Last year, we gave over $11 million in grants to over like 100 different projects, and we're growing every single year. So if you're looking for grants for your project, come on through to Alpha Growth, and we'll end on the thanks for everybody for showing up. And I really appreciate everybody's time today. Thanks for coming. Take care and have a great week.